So today's agenda, I'll just give you a quick introduction to how to operate within this self-directed IRA environment. We'll talk about specifically what private money lending is, and we'll give you some tips to prepare for your first deal as a private money lender, and more tips on assembling your team. So what is a self-directed IRA? A lot of people get confused with the terminology, and it's basically an IRA is an IRA whether you hold it at Edward Jones or whether you hold it in a custodian that's a self-directed custodian. It's the same thing. The IRA that you hold at Edward Jones or Charles Schwab, they're more limited to just publicly traded assets, stocks, bonds, mutual funds. Whereas if you move it over to a different custodian, you get to self-direct your assets, and you can buy many different types of assets. You're not restricted to just stocks, bonds, mutual funds. You have the same rules. The IRS rules are the same, whether you're at Fidelity or whether you're in a self-directed custodian. You can have different types of accounts in your self-directed IRA. You can have an IRA, a Roth IRA, Coverdell savings plan, an HSA, a solo 401k. So any of your traditional tax deferred or tax preferenced accounts can be put into a self-directed IRA custodian. So one of the other key differences is you as the account holder in a self-directed IRA are responsible for directing your investments. If you don't put it in an investment, it just sits there and doesn't earn any money. Whereas if you're holding it at Edward Jones, maybe it just draws a little bit of interest in a money market until you figure out what you want to buy with it. So there's virtually hundreds of different investments that you can make with your self-directed IRA. You can buy cryptocurrency, you can invest in residential real estate, commercial real estate, syndicated deals, mobile home parks. You can just buy land, joint ventures, lease options. We're talking about private money. Oops, I pushed the wrong button. Sorry. Okay. We're talking about the private lending today. I was seriously looking at some crypto this week.
Don't you do it. It's way too high. Wait for the summer.
I know. I've got to set up my IRA so I can buy. I don't know anything about crypto. So we'll talk later. Yeah. So one of the biggest things that you need to understand when investing in your self-directed IRA is you cannot do transactions with certain people. They're disqualified people. So for our purposes tonight, for private money lending, you cannot loan money from your IRA to your father, grandfather, spouse, son, daughter-in-law, grandchild. Lineal descendants of you going up and down the tree, you cannot transact with in your IRA. It's a prohibited transaction. Your plan will lose its tax qualified status, and you will have to pay taxes. It will convert and be taxable. So that's one of the things that really trips people up. So if you're a private money lender, you can lend to your aunt, but you can't lend to your son. You can lend to your sister, oddly enough, but you can't lend to your mother. It's just a rule. Some other people that you want to try to tread lightly on in your transactions in your self-directed IRA are your fiduciary or anyone that provides services. If you own a business over 50%, let's say that you own a car wash, you could not, your IRA could not do business with your car wash. Your IRA cannot loan money to your car wash because you own 50% or more. And also, if you have a company and their officers, directors, and employees, you probably should not be doing transactions with them either, just to avoid any inference of impropriety. So just stated another way, because this is the big, the big problem people have, you cannot have any personal benefit from your IRA. The benefit that you're going to get from your investments in your IRA will begin when you start taking distributions at your normal retirement age. That's when you get your benefit. Right now, you're building your portfolio, you're building your investments, you're planning for your future, you're building wealth, but you're not going to be spending that money. So you can't borrow money from your IRA, you can't sell property to your IRA. For the real estate side, you can't buy property for personal use, like a cabin in the mountains that is rented on Airbnb. You can't do that with your IRA if you're going to stay in it. So if you own a property, you can't conduct repairs on the property. And again, you can't contract, the IRA cannot contract with businesses owned greater than 50% by you. And we talked about that. If you do this and it's caught, then your account will be treated as a taxable distribution. So any questions on that before I hand it off to Brenda?
That's just a review of the self-directed IRA stuff? Okay.
It's a lot.
Okay, how does the clicker work?
That way is that, and then the thing is for the highlight.
Okay. So what is private money lending? Private money allows you to act like the bank, so you have the ability to dictate the loan terms, the interest, the rates, the fees, the types of property, how much you're willing to lend. It is passive, not active investing, and I want to talk about that today and be very clear that that's one of the things that might draw you to this avenue of investing with your self-directed IRA, because to be an active investor or to actively be working with property managers on properties, it's just a lot of more moving parts and pieces than being a private money lender. So being a private money lender with your self-directed IRA can be quite a bit more passive than actively owning real estate. Even though when you own the real estate, you're still not touching it, there's still a lot of different parts and pieces to owning real estate that you don't have to deal with private money lending. So the elephant in the room that everybody says to start is, what if they don't pay me? That's what people always think. So I thought we would just talk about that first, because we're not going to be able to think about anything else till we get past that. You know, what if I loan somebody money and they don't pay me? So if that happens, what are you going to do? What do you think is going to happen?
I know a guy.
You know a guy?
There's cameras.
There's cameras in here. So other than you know a guy, what do you do if you loan money and somebody doesn't pay you? Did you collateralize your loan? Do you have collateral? What is the collateral on this loan that you made? So if somebody doesn't pay you, you're going to go and take this property from them. Now, it could be that you've loaned, the collateral is real estate, real property, and then you get that collateral. So it's important to pay attention to how much you loan somebody compared to how much is the property worth. If you do have to recollateralize and take it, and then you end up with a discounted property in your self-directed IRA because your person that was supposed to pay you didn't pay you. And it doesn't have to be real estate that is your collateral. It could be a business, right, Cindy?
Mm-hmm.
You could loan somebody money for a business, but all of their equipment and their business is the collateral, so if they don't pay, you can take that from them. Or it could be crypto, like you just mentioned. If somebody is having a run on crypto and they don't want to cash it out, which talking to a borrower that's in that situation right now, refusing to cash out his crypto, but he wants to use it as collateral to get a private money loan against it. So that could be your collateral. What are you comfortable with? I saw somebody go, no, I would never do that with cryptocurrency. Okay, then you're not comfortable with that. But you know what? If you're the private lender, you get to decide what is the collateral for what you're loaning this money for.
So Brenda, if I give somebody a $100,000 loan and my collateral is a tract of land, 50 acres, that's worth $300,000, and he doesn't pay me.
Then you will foreclose and take that property, and congratulations, you just bought some property at a very deep discount. So as long as,
Whatever they sign. Whatever they sign as collateral.
whatever they sign, you take it. So you want to pay attention to that collateral and your investment to the value, like what's your money that you have in compared to the value of this collateral, whatever it is, whether it's land, property, cryptocurrency, what else could we loan on? Businesses, heavy equipment, you know, maybe somebody that uses heavy equipment, just, we could go on, just anything as long as you are collateralized, you're fine. So private money versus hard money lending, people will say to me when they will call, you know, I'm looking for a hard money loan, or I'm looking for private money, or they'll call and they'll say, can you tell me the difference between a hard money loan and a private money? So hard money loan it's actively ran usually by a lending business, and it's pretty stiff what they want. So, for example, I know a company, and they will lend hard money, but it's 3.5 points up front, it's 12% interest, and you have 12 months to pay it back, but they close really fast, and they don't ask for an appraisal or a credit. They just look at the property. Now that's hard money. The terms are hard, like they kind of hurt to pay, but look at what you get out of it. You get a quick close, you get the deal. So if it's a deal and you need to close quickly and you need to grab it, hard money might be the option. Private money is maybe somebody in this room that has a self-directed IRA that is happy to lend out of their self-directed IRA because it's a pretty passive way to invest with their IRA, and their terms are not as steep. They're not as hard to digest when you're borrowing it, and they may carry it a little bit longer. You know, a private money lender may not want to hear from you for 3 or 4 or 5 years, so they're happy to loan that money out to you for 3 or 4 or 5 years because they know that they don't have to mess with it for that long, and that interest continues to come in, and they don't have a yield drag whenever they have to go out and find another lender. You know, they're quite happy to let you borrow that money for a longer term. And they may not say anything about origination points. You know, origination points are the percentage that you pay on the loan amount when you get the loan. So a private money lender may not even charge that, or their origination point may be 1 point instead of 3 points. So they'll have softer terms for you as a private money lender. So it's an individual or a small group of partners who lend out their money. Why do active investors pursue private money lending? Well, the property doesn't qualify for conventional financing sometimes because it's in an unlivable condition and it needs to be rehabbed. So an investor may want private money because they know they're going to have to rehab a property. So they'll get that private money to purchase that property and then fix it up, and then they'll cash out, refinance it into some more traditional long-term financing. Or the borrower may want to present an offer with a really quick closing, because sometimes investors come across opportunities that need a really quick close for whatever reason, and they need to be at the closing table in a couple of weeks. Well, private money lender may be your option for that. And they're looking for simplified underwriting, or they just can't qualify for conventional lending, so they just call them private money for their deal. So why should you be a private money lender? So this is putting you on instead of being the borrower, putting you on the side of the table with the bank, and you're the lender. Would anybody in here be interested in doing that, or have a reason why they would want to do that? Be the lender instead of the borrower? What would you get out of it? What would you make off of it? Like, what would be a benefit of loaning money to? I'm not talking about your favorite cousin that comes to Thanksgiving, but a qualified investor comes to you for private money that you know. What would be your benefit of lending to them?
You're going to make the money off your interest and any type of fees you charge.
Yeah, origination fee and the interest that you would make. And again, if they don't pay you, what?
Get the land.
You get the land.
Good deal.
This is a land man, so he heard the word land and he perked up. So
I love owner financing because they default, you get it all back.
yes.
Sell it again.
So alternative solution on the road to wealth without operational challenges of direct ownership. And I'm here to tell you, if you're a landlord that owns multiple properties And that's how you're going to go about it. That's active. It's very active. Talk to some landlords that have more than 10 properties. What are they going to tell you? Have you heard from some of them? What do they tell you, BJ?
Busy, it's constant.
It's constant. What do they say about them?
Mostly that's just like, they're having to deal with things constantly whenever a problem comes up. I mean, they're just having to.
And they dread that phone call. They dread to hear from their tenants. They, you know,
That is good news.
or, you know, they're hiring people to run that property. So if they hire a property manager, still they're taking some of their money that they would be making and paying that property manager. And then guess who they're managing? The property manager. And some property managers are absolutely fantastic and some are not. So, you know, you might end up with a property manager that you're managing. So you just traded off what you were dealing with. So if you're the money lender, you don't have any of that. So I know some people that just would not want to own property, but they want to invest, but they don't want any of the headache of the property. And this would be a way to get in the game of real estate, because everybody wants to get in the game somehow. So this is a way to be in that game without the headache of owning the property and managing it. And it allows for a generation of real mailbox money. They tell you owning property and being a landlord is mailbox money. It is not. It is an active job. But passive investing, like lending money, could be really, truly mailbox money for you.
So Brenda, why don't you tell the audience about the decision you're trying to make now between investing in new properties with your money or doing private money with it, and the difference in return.
Okay, so I'm the definition of a tired landlord. So I have properties and I rent them out long-term, mid-term, and short-term, and the expenses of the properties sometimes outweigh the revenue that comes in because unexpected things happen in owning those. And I'm not sure I want to really own that many doors. Like a lot of investors say, I want to own 50 doors, 100 doors, 200 doors. It's not about doors for me. It's about peace of mind, you know, and being able to live my life. And do I need more doors to manage? I'm not so sure about that. Like I think I would rather switch gears and be more passive, and this would be a great way to be a more passive investor but still be in the game.
Now, what do you think if you owned a bunch of doors, but it was all like an apartment complex rather than a whole bunch of individual places?
Yep, that could be better if your property is being managed and not mismanaged. I would hope and pray that my property manager was doing a good job, because I would not want to do that.
It seems like that's an easier route than a whole
Maybe
bunch of
so.
individual houses.
I know somebody that runs some property in this room that's multifamily. Is it passive? Is she listening? Can she even hear me? Orlando, can she hear me? She can't hear me. There's a certain goddess in this room that manages multifamily property, and she will tell you it's very active and not passive, even though it is probably easier to have 15 doors in one building versus 15 houses.
Every time you rent it, it's going to be active.
But I've heard her talk about other problems that they have, like the tenant downstairs complaining about the tenant upstairs, or beside vice versa, and on it goes. So are the days of our lives with that. Yeah. So
All right.
you want to talk about this part, Cindy?
Yeah.
Or are we gonna?
So, you know, there's a lot to learning how to be a private money lender. A lot of steps that go along with it. When you have your IRA and you move it over to the new custodian to prepare to be a private money lender, and there's a lot to learn. All the custodians that I've been in contact with offer some good training, good courses, good customer service. You can call, ask questions, and learn as much as you need to start being a private money lender. But we just wanted to kind of go over a few things that you really need to think about yourself, like, what do I want to do? So who do I want to lend to? What are my lending criteria? And where am I going to find my borrowers? Big questions. All of those are big, big questions. So we'll pause here if y'all want to scan this. Bigger Pockets has a personal private lender assessment. It's really good, that you can fill out and just kind of find your buy box, so to speak. and just kind of frame in everything that you need to think about before you start lending money to people. So who do you want to lend to? Do you want to lend to fix and flippers? Some people may be like, I don't want any part of fix and flippers. Too active. Do you want to rent to people who have more long-term needs? Maybe 5 years, even more. Some people, some of our private money lenders are quite happy at 8% for 5 years. Myself, I'm not happy with 8% for 5 years. I want to be less than 12 months, and I want my rate to be a little higher. So you can loan to small business owners, to help your neighborhood, revitalize your neighborhood if that's something you're interested in, helping somebody open a coffee shop. You can set that up, interest only, to help them get started because you're the bank, you get to pick. You want your money back, but you get to pick the terms. There's a nice niche of private money for borrowers that need short-term gap financing, and that is sometimes in the wholesaling environment, the wholesaler will have the contract and they'll assign the contract to someone else, and they'll have to do a double close. So essentially, they just need to borrow, let's say, $200,000 for an hour. But you get quite a good fee for that. So you let them borrow the $200,000, and it goes to the title company. It's held in the title company, so they close in the morning on their contract, and then they sell an hour later. So that's a good niche that some people are getting into. Once you understand it and make connections, that might be a good niche for you. And then, do you want to lend to developers? That could be a longer term, perhaps, because developing usually takes more than 6 to 12 months. You can think about me and my campground development and tiny home development dreams. So,
There's more cash flow, isn't there?
Pardon?
A lot more cash flow, though. They're constantly building, selling, selling.
A lot of time for when you're in a part of a whether you're in a pool of lending for developers or if it's just on you, it takes a while to develop it, about 3 to 5 years. That's what I'm seeing. And then they start paying people out in 5 years. But you do get that money for a longer term. So if you start by clearly defining your terms, you're not going to get sidetracked by somebody's sob story or their grand illusions or whatever. You'll be like, no, I have to have collateral. I have to have an appraisal. I have to have, you already know. You're thinking with a clear mind of what your criteria are, and that's how you're going to move forward. So stay grounded and don't let somebody talk you into something that's not wise. I have somebody right now I'm thinking about for a loan. I'm like, I don't have the application's not full yet. It's not complete. I'm not doing anything until, no matter how much I like you, you have to give me all my facts before I can do this deal. All these criteria are something you're going to have to think about. So the interest rate, normally in private money lending, you're going to get a bit of a higher rate than the banks are going to be charging. So depending on who you're lending to, is what your rate will be. And you learn that by just studying, attending classes, and just learning about being a private money lender. Origination fees, that's something you can charge or not charge. I think typically they're from 0 to 3% on the private money lending side. Monthly payment terms. If you're doing a fix and flip loan, typically those are short term, like 6 to 12 months, and you're not going to charge principal, you'll just charge interest. And monthly interest, you can say I have to have monthly interest, or you might load it to the end and get all the interest at the end. Length of the loan, again, that's something you determine. Do you want to loan somebody $200,000 and set it and forget it for 5 years, or do you want to keep churning it? For me, I'm doing less than 12 months. If I can loan the same 50,000 out 4 times in a year and make 2 points every time, you know, that's good for me. Collateral. What is the collateral you want to take? Or what is the collateral you don't want to take? You don't want a crappy collateral pool, for sure. You need to think about late fees. If they don't pay on time, how much are you going to charge for late fees? Balloon payments. A lot of times people will pay interest only for the life of the loan and then pay the principal at the end. Or they may pay a shorter amount of principal during the life and then catch up at a balloon at the end. Do you need a personal guarantee? Again, that depends on who your borrower is, what the project is. I would always want to get a personal guarantee. Holdbacks and draws. If you're doing fix and flips, when you lend, if somebody needs $150,000 for a project, $75,000 for the down payment, $75,000 for reno, you're not going to give them $150,000 right at the front. You'll give them the $75,000, and then as they make their start doing their renovations, you'll advance them on their renovation cost. You don't want to advance $150,000 and have them not do the renovations. So, and then you need to be aware of usury laws, licensing, and other regulations. Usury is laws pertaining to the amount of interest you can charge. So you can definitely get help with that from your attorney and your title company and your transaction coordinator. So where do you find borrowers? Well, at educational events like this, at real estate meetups. There are several that we go to and recommend. Knoxville's Best Real Estate Meetup, the Grid Network, Investor, Sono Network. Is there any others that you?
Knox-REA.
Knox-REA. Knoxville's Best Real Estate Group. They every meeting, people have to stand up and say what they need, and people will always say, "I need money. I need private money," and then somebody else will say, "I have money." So you can, it's an exchange right there. You can find the money if you need it, and there's always money. People always have money. You can find borrowers on social media and other online platforms, but as with all money lending, do your due diligence, especially for social media and online. You don't know those people. The guy at the RIA that you see every week, you might know him better. You still need to do due diligence on him. It's up to you to do your due diligence and to protect yourself. Another way that you can find a way to place your money, there are capital raisers who will, sometimes they'll take pools of capital from different borrowers and they'll fund a bigger project. And so they will offer you the opportunity to just place your money with them, and you don't have to worry about all the rules, but you still need to do due diligence on that and make sure you trust them and see what their record is and their experience. And then NLS, that is us, Brenda and I, we are working to build a database to connect lenders with people who need money. So we'll have our own little database of that and can hopefully connect people together. Pop quiz. Okay, what type of investor do you want to lend to?
Incredible one.
A credible one.
What makes an incredible investor?
Somebody you're gonna get your money back from.
How do you know, how do you recognize that person that you're most likely to get your money back from?
Rolling the dice.
No, it's not rolling the dice.
Money already?
Track record?
Tracker. And what'd you say?
Yeah, same thing. Maybe
Okay.
money already.
They're already doing it. Yeah.
And you do credit checks on people?
Yeah.
Yeah, background check.
Yeah. And I'd want to know how many deals have they done. Not to say I wouldn't lend to a first-time investor, but I would just be more in the deal with them, like, what are you doing? Show me what was going on, and maybe charge a little bit more interest, because interest is really about the risk to the lender. So the riskier it is to you, just charge a higher interest rate. So first-time investor, maybe a little higher rate, but
You wanna make sure they got some knowledge as to what they're getting into, they're not just jumping into something they don't know anything about.
right. But they all
Yep.
need to start somewhere, you know. But
Gotta be vetted.
do what?
Need to be vetted. Well,
Yeah.
Yeah.
How do you vet them?
I figure just like they said, interviewing, just seeing just what they can bring to the table and how they're gonna do it right.
Mm-hmm. And if you go to networking events and start asking around, people will tell you, they'll tell you, like, you probably shouldn't loan to that person, or, he does a lot of deals, I really
Yeah.
see him being active, and or she's really smart and savvy and does a lot of stuff, and I would, just ask around.
I have a working capital loan on the books right now where I lent a certain amount of money to an investor, and he's not working on a fix and flip. He just needed cash, and all his money was tied up in his other investments. So until he sold some of those properties, he was kind of, at the top of his limit. And that's not unusual in the real estate environment for people to have all their money in their flips, and they're like, I just need a little bit until this sells. So it's not a bad thing. You don't look at them unfavorably because of that. You just get a really good property that's cash free and have that as your collateral.
You collateralize your money. That's right.
Yeah. So, another question. If you were going to do a $50,000 loan to a fix and flip investor, what kind of collateral would you take?
Property wouldn't
The property? What if the bank had the first position on that?
Is it possible to put a lien on it then?
Yeah, you can do a second lien position.
Maybe like the personal property also.
You could take personal property.
How much let's talk about your investment to value though. So if you're going to loan $50,000, how much equity do you want in the property that you're loaning against? Like if you're going to put out 50, but if you have to take it back, how much equity do you think needs to be there so you feel comfortable loaning 50?
More than your investment.
Yeah.
Okay. How
Yeah.
much more?
Whatever you want.
What are you comfortable with?
Me, I'd want another 25 grand on it if it went down the toilet.
Yeah.
Okay. Think about it in terms of a percentage, like an investment to value. Instead of loan to value, just think about your investment, your amount, to the value of the property, and what's that number, and what are you comfortable with? 50,
I like
60, 75?
Yeah, I like 70, 65, 70. Can you lend money to your brother to finance his new business?
In your self-directed IRA.
Yeah,
Yes.
yes, because he's not lineal. Is it a good idea to lend to your brother? I don't know your brother. What is a balloon payment?
That's a huge payment at the back end.
That's right.
Yeah, the amount you got to pay it off.
So, with all this that you've heard so far, we're not done, is being a private money lender a good option for you guys?
Sounds fairly easy, actually. More passive.
Denise?
It'll take a while for me to get there.
It's okay.
I'm going
She
with
just
you.
needs to
I'll
experience.
go with you and do the campgrounds and things.
That'll be great. I will call you. I'm excited about that.
Campgrounds and storage places.
After
Exactly.
you've experienced some of the pain of being a really active investor and you've built houses, right? It's a lot of work.
Yeah, it's built housing, cabin subdivisions and house subdivisions.
If you've experienced a lot of that, you might get weary. And you still want to be an investor, but you don't want to be doing all the things anymore. So this is just one of the ways that you can still invest, but more passively without being actively doing all the things every day.
And if you already know the market, and if you already know real estate, but you're tired of fixing toilets or worrying about somebody's toilet, you can kind of shift over a little bit of your portfolio to private money lending and not have to worry about tenant issues. Okay, Brenda, talk about the team.
Okay, so if you've decided you've overcome the hurdle of getting past the point of worrying about lending money and you're like, I think I really want to try this, there are certain people you need on your team. You need real estate investors in their groups, like we talked about, the ones that we go to, this community, because there'll be people that loan money in here, and I gotta get a drink. An attorney, so you're going to need an attorney to make sure you're doing everything right. A transaction coordinator. Cindy, you're going to have to take this.
Okay, I will take it.
Whiskey to clear that up.
Yeah. So a transaction coordinator is somebody that you just give your documents to. You're like, here's my deal, here's my loan, take it. And they will do the documentation. They'll work with the title company, and they'll keep it moving through. Pardon? Yeah, a real estate agent could be good if you have questions on valuation and for appraisals. And I'm not aware of real estate agents doing the same role as that, because it's more specific to lending. So
So where would you find a transaction coordinator?
I have one. I have one. They do advertise, and that's another reason to hang out with the real estate investor groups, because they can share their contacts and their good people they work with. Her name is Rochelle, and she does a great job for me. She keeps the title company in line and keeps everything moving. She works with the attorney, gets all the documents prepared, and because it can change depending on what state the borrower is in. So they make sure that all the docs are right, and I don't have to worry about it, because I never went to law school, so I don't know. And
Where did you find her, Rochelle?
okay, I have a story to tell you guys. I went to look at a property one time. I wanted to buy land to build a campground, recurring theme. And so I didn't end up buying the land. It didn't work out for whatever reason, but I made a good connection with some of the people I met that day. And I ended up, one of the people I met asked me if I could lend money to him. And I said, yeah, and he told me the amount that he wanted and the return he would give me, and it was a phenomenal return. It was the kind of return you're like, I can figure this out. I don't care who I have to pay. I can figure this out. So it was such a great story. The next morning, I already had a coffee scheduled with an investor friend of mine, and we were sitting there, and I said, Greg, I said, I just got this offer to lend this guy all this money, and I don't know how to do it. I mean, I know how to do it. I've been in banking for 15 years, but I don't know how I need to do it for me today. And he said, oh, I got a girl. So he gave me her contact information, and I called her. She's like, okay, yeah, I got it. Just made it easy.
Yeah, they're out there.
So all my job is to make connections, meet people, talk to people, let them know that, I'm available to lend my capital to them. And I give it to my team, and they help me, make sure I'm secured. So, and I have to make good deals too. I mean, I'm the one that makes the decision. I just hand it to them to process it.
The investor always makes the decision. You make the decision.
Yeah, you make the ultimate decision. And then on my deals, it goes through the title company too. And so they record a lien on the property. So if the property's sold, I have to get proceeds for it. So you don't want to do you don't, that's why you have to set your policies up front, because people will say, oh, this property's worth this, we don't have an appraisal, it'll take 2 weeks to get an appraisal, and you know, there's no liens on this property, and all these stories, and they could think that it's true, but
Trust
it
but
may
verify.
not be. Yeah, trust but verify. So that's how you have to build your processes out when you're starting this. So that is the end of our presentation, but I will tell you that we have another event for private money coming up in December. It's on Zoom. Brenda and I are going to Orlando in January for a private money lending conference that we're super excited about. We were supposed to go in, what was November? But the hurricane, we couldn't go because of the hurricane, so they rescheduled it. So we're super excited to go to the private money lending conference, and we're going to be on fire when we get back. We'll probably have to have another Zoom in January to tell what we learned. Maybe we'll do it at the conference.
Maybe we'll have to do some live events, so sure.
And Brenda, if you don't know, is a whiz at mortgage notes. She buys and sells and originates mortgage notes on the open market. And so the first 3 months of 25, she's going to be teaching us and me how to invest in mortgage notes. And it's pretty high level stuff. That's what we call ourselves Next Level Strategies, because we are teaching kind of some really higher level stuff. And it takes a while to let it sink in. It's kind of hard, you know, and that's okay. But we just want to give you the concepts and say, this is available for you. You know, you can buy these investments in your self-directed IRA. You can be a private money lender if you want to. So that's kind of our purpose in that. So we have all the QR codes and stuff now. We're getting fancy because we have the tech goddess right there.
Our technology team here is fantastic. If you need a referral for some exposure, there you go. They'll take care of you.
So there's some custodians for the self-directed IRA in case you want a head start on where to find it. And again, they have a lot of education and training, and they can help you with that. They have so many webinars and stuff.
Free education.
Yeah, it's free as well. So we are happy to take questions.
Any questions? No. Who's going to be a private money lender? Anybody? You?
Me when I have all the money in the world.
When you get all the money? Maybe. Maybe after you've done all the investing and you're just sick and tired of it, and then you want to do something more passive, that's when you'll do it. Maybe you get smarter, faster, and decide not to be so active and be a money lender. But it's definitely an option and good to do in your self-directed IRA.
I like Cindy's idea. I'd like to get in on something like that. Invest and build some campgrounds. When I used to sell campers, and I used to own campers. I'm familiar with campgrounds.
I know a guy that has some land up near Bucky's.
Yeah,
he's selling
exit
for-
407.
Yes.
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 Do you want to go in together on that one?
There you go. It's your
We'll
partner.
do it. I will call. Yeah,
See,
that.
that's the power of networking.
Yeah.
When I was a builder, I always wished I had a girlfriend or wife or somebody that was in the real estate industry, because I had the construction company. It's like,
Yeah.
I need somebody in this end of the market here, so we can work
Yeah.
together. We can do all this.
Yeah.
Yeah. Well, it helps have partners, good partners. So, and support from all of you. We appreciate it, and thank y'all for coming out.